Do you ever watch a strong market trend take off, feeling like you've missed your chance to get in? Today, we'll fix that. We're breaking down the Sweet Chariot strategy, a simple, powerful setup designed for precise entries into an established trend. Let's learn how to ride the trend, not just watch it. The Sweet Chariot is a simple and powerful method designed for long trades. We focus on finding clear entry points only in markets that are already trending upwards. Our goal is to trade with the market's existing momentum. At its core, this is a trend-following strategy. This means we don't predict the market's direction. Instead, we wait for a clear uptrend to form, and then we look for a specific signal to join the move. We simply react to the market's established strength. The key to this strategy's simplicity is that it's based on just one indicator, the 40-period simple moving average, or SMA 40. This single line on your chart is all you need to identify the trend and find your trading opportunities. No complex tools are necessary. The entry signal is straightforward. In an uptrend, we watch for the price to pull back towards the SMA 40. Our trigger is a strong bullish candle forming above this moving average. This candle confirms that buying pressure is returning, signaling that the trend is ready to resume. This strategy works best on specific time frames. We highly recommend the daily chart as your main reference. Daily charts filter out market noise, which gives us clearer and more reliable signals for this particular system. The strategy is also very effective on the weekly chart, making it ideal for swing traders. For those who prefer faster charts, the 4-hour and 1-hour are usable as well, but be aware they can produce more false signals. For our examples, we will focus on the daily. Let's move to the first and most important rule: the trend condition. For a valid setup, the price must be trading clearly above the 40-period SMA. We want to see the price treating the moving average as a dynamic support level, not cutting through it constantly. Here is a perfect visual example. Notice how the price stays consistently above the yellow line, the SMA 40. When the price pulls back, it finds support near the moving average before continuing its upward climb. This is the exact type of market behavior we are looking for. The second condition is equally important. We need a true trend. The market should be making higher highs and higher lows. This strategy is designed for trending markets, so we must avoid trading it when the price is moving sideways in a flat or choppy range. Now, look at this chart. This is a market you should avoid. The price is not making clear higher highs and is trapped between a support and resistance level. This is a sideways or ranging market. The Sweet Chariot strategy is not designed for these conditions, so we would stay out. Once the trend conditions are met, we look for our specific signal candle. The first requirement for this candle is very precise. At least 80% of its real body must be located above the SMA 40. This ensures the candle shows a decisive move away from the moving average, not a weak one. Let's look at this visually. The candle on the left is a valid signal. You can see that almost its entire body is above the yellow line. The candle on the right, however, is an invalid signal. A significant portion of its body is below the SMA, so it does not meet our 80% rule. We would ignore this second signal. The second requirement for our signal candle concerns its closing price. The candle must close in its upper third. Why? Because a strong close near the high of the candle's range confirms that the buyers were in full control at the end of the session. This is a sign of strong bullish pressure. Here's how to visualize it. If you divide the total range of the candle into 3 equal parts, the closing price must be in the top third. As you can see in this example, the candle closes very near its high, easily meeting our condition and confirming the strong bullish momentum needed for our entry. Now that we've identified our perfect signal candle, how do we enter the trade? The rule is simple and mechanical. We place a buy order just above the high of that signal candle. We enter on the breakout, which confirms the upward momentum. This means our actual entry won't happen on the signal candle itself. It will happen on the next candle, but only if the price moves up and breaks the high of our signal candle, triggering our buy order. If the price doesn't break that high, we don't enter. Let's see it on the chart. Here is our valid signal candle. The yellow line marks the entry level, placed just above its high. The entry is triggered on the next candle as the price moves up through that level. At the same time, we'll place our initial stop loss, which we'll discuss next. Entering a trade is only half the battle. Now let's talk about the two most critical parts of any strategy: where to place your stop loss to manage risk, and how to manage the trade once it's profitable. The stop loss rule is as simple and clear as our entry rule. We place our initial stop loss just below the low of the same signal candle we used for our entry. This placement logically protects our trade. If the price drops below this low, our trade idea is likely invalidated. Looking back at our chart, you can see the stop loss level marked by the red line. It's placed right below the absolute low of our green signal candle. This defines our initial risk for the trade very clearly before we even enter. For our exit strategy, since we are trend following, the best approach is to let our profits run. A trailing stop is highly recommended. This means we will move our stop loss up as the price moves in our favor, protecting our profits while staying in the trade as long as the trend continues. Here's an example of how a trailing stop works. After the price moves up, we can move our stop loss from its initial position to break even, our second stop loss. As the trend continues, we can keep moving it up below recent swing lows, like the third and fourth stop loss level shown here, locking in more and more profit. Alternatively, more advanced traders might prefer a discretionary exit. This could mean taking profit at a key resistance level, or based on other factors. However, for those starting out, we strongly recommend sticking to a mechanical trailing stop to build discipline. Let's quickly recap the main strengths of the Sweet Chariot strategy. First, it's a clean and objective method. The rules are clear, which helps to remove emotion and hesitation from your trading. Second, its simplicity is a huge advantage, being based on just the 40-period SMA. Furthermore, this strategy is versatile. While it excels on daily and weekly charts, it can be adapted to various instruments. And finally, the setups are easy to spot visually directly on your chart, without needing any complex or paid indicators. To be fair, we must also discuss its limitations. First, as designed, this is a long-only strategy. Second, it is not effective in sideways or ranging markets. It absolutely requires a clear trend. And finally, its performance can vary across different instruments, so you must test it on the market you want to trade before risking real capital. So, my final thoughts. The Sweet Chariot is a clear and disciplined method, suitable for both beginners looking for a solid rules-based system and advanced traders. Its simple logic means it can be applied manually or even programmed into an automated trading robot. And this is my most important piece of advice: always, always test this strategy on a demo account first. Get a feel for it. Observe how the price behaves around the SMA 40 and practice identifying the setups without any financial risk. This is a crucial step for building confidence and long-term success. Thank you so much for watching. I'd love to know what you think about this strategy, so please leave a comment below. Also, let me know which other trading methods you'd like me to explore in future videos. If you found this guide useful, please give it a thumbs up and consider sharing it with other traders who might benefit. And of course, don't forget to subscribe to the channel and click the notification bell so you won't miss any future content. Thanks again for being with me. Keep studying, keep improving, and happy trading.